Money FM 89.3. Best of breakfast. The bigger picture only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang, and we've got lots to talk about when it comes to Singapore markets. Not too long ago, in fact, just last week, we were knocking on the door of 4,000 points for the Straits Times Index, and we had a massive plunge yesterday, more than 7% down, and we've got all 30 constituents in the red. So where does it go from here? Is this a time to go shopping, or is there more to watch out for when it comes to looking for the floor? Let's check in with Alvin Chow. He is the CEO of Dr. Wealth. Good morning, Alvin. How are you doing?
Hi, Ryan. Thanks for having me.
Yeah, nervous times for markets. And give us the context of what we're seeing, the Singapore session right now, when you have such a massive plunge. Do you remember when was the last time we saw such a huge pullback?
I guess the last time brought us back to around COVID period, 2020, where global markets were also doing a lot of sell-offs consecutively over a few days. So it really felt like that period. Of course, the reasons this time is different. It's more tariff-driven rather than pandemic.
Yeah, so how surprised are you the magnitude of sell-off, considering that Singapore stocks typically are seen as a defensive, sometimes safe haven play? We did see Singapore stocks sell off with the rest of the region.
Yeah, definitely 7% drop on the index is quite large magnitude that most investors are not used to in the local market. And we are diving into the names. We are looking at very popular investments like the banks. We saw DBS down 9%, OCBC, UOB down 7%, 6% respectively. And so these are magnitude that I think it has really been years since we really felt this sort of drawdown. And even for REITs, they also went down 4 to 5% on average. And initially, last Thursday, just after the announcement of the tariffs, the REITs actually went up. So some were still hopeful that there were some defensive traits of these REITs. But somehow, yesterday, the sell just spread it to the REITs as well.
Yeah, so there's quite a bit to unpack here. So one is the tariffs' impact on the economy. Imagine to some extent there might be an impact on global growth. There's talk about recession. So all this could have an impact on banks. And then for banks, it's going to be a bit of a double whammy because now you have talked about even more rate cuts. Are we going to see more profit-taking on banks, you imagine?
I guess there would be mixed camp of investors, right? Those who have been holding on to the bank stocks and enjoying the capital gains over the last 1-2 years would probably look at de-risking. And I also have met investors who have sounded their optimism that banks are on fire sale. They are looking to add to their position or even in new position. So I think it depends on where you stand at this point in time.
Yeah, I think it's a good time to recap the first quarter, which was quite a pretty good 3 months for the Straits Times Index. Singapore stocks moving higher, partly because of the good showing from banks, but not banks at the top of the table. Give us a lowdown. Who were the top winners in Q1?
So in Q1, the top winner was ST Engineering, a defense company. It was up for about 45%. So that was the highest returning STI component. And second, we have Sembcorp Industry, about 15%. UOL is third, also up about 15%. So banks did well, even though not as well as some of these counters. Right, even DBS was up about 7%, UOB was up about 5%. So it wasn't that bad even for the banks in quarter one.
Okay, so what were the drivers for some of these outperformances? You mentioned SC Engineering, defense. I imagine that is to the degree of the uncertainty and the geopolitics we are seeing right now?
Yeah, definitely the macro has been favorable for defense companies, but on top of that, the fundamentals were good, the earnings results were good, there were growth in their businesses. So there are real underlying fundamentals that power some of these moves. So I would say that it's not merely just a story-driven kind of share price increase.
Okay, how much does the Straits Times Index reflect what's going on with the Singapore economy? Being such a small country, being trade and export sensitive, with all the tariff action going on, are the fundamentals still in place for investors to bank on Singapore stocks?
I think from a valuation standpoint, it isn't demanding. If we take a look as a whole, right, the STI is still yielding about 4 to 5%, right? So it's quite high for an index to be giving such dividend yield. And that also shows that the underlying strength of the companies that are in the index, they are able to still distribute dividends, large enough dividends. And from the PE perspective, right, PE ratio perspective, the average for SDI is about 16 times in the last 10 years, and we are now at around 13. So I would say that from a valuation standpoint, it is still attractive. And given that share price are falling, and that makes the valuation even more attractive, right, versus the fundamentals that they are presenting at this point.
All right, Alvin, talk about attractive valuations. It's not just Singapore that's pulling back. You've got US stocks also pulling back. So if I'm an investor, I've got a pot of money, how should I be thinking about investing when you are approaching US versus Singapore stocks? What should be some of the questions I should be asking, how to split my money?
I guess it depends on the preference of the investor. If one is more growth-oriented, of course, the U.S. market would be a more attractive place because there are a lot better growth stocks there. If one is more interested in getting an income from the stocks, such as dividends, then I would say that Singapore would be a more attractive one because dividend is not taxed here and dividend yields tend to be higher as well. So I guess it's the objective of the investor.
Okay, so let's look into the crystal ball for the rest of the year. What sort of tailwinds could we look out for when it comes to the Singapore markets?
The MS Review Group and its supporting policy would definitely help, right? So one would be the announcement of the 5 billion equity market development program, which is aimed to boost the ownership of Singapore stocks via the funds, hedge funds in Singapore. Right? So that could have some buying support for local companies. And for the tariff itself, Singapore is less impacted compared to the rest of the countries, right? Because we are looking at 10% tariff versus our neighbors like Vietnam is 40% tariff. So Singapore may have an edge that our manufacturing may be probably seeing better future in the near future compared to our neighbors with regards to these tariffs. And I also believe that there will be more trade agreements with other countries, may not include the US, but the rest of the countries may come together closer to work out some deals to make sure that their exports are still flowing.
Okay, how about the election effect? Typically, we see this play out favorably for other markets. Could we be in for something similar in Singapore?
I would think that the election impact this time round may be more muted because of what's going on, right? Because the macro, the tariff is a lot larger than what politicians could overcome in a short span of time, right? So even policy support from MAS will take some time, right, for it to see its effects. So I don't think this year alone, just by election, the impact would be big enough to overcome all the macro uncertainties at this point.
All right, Singapore elections to be held no later than November 2025, so definitely something to look out for indeed. And we've been in conversation with Alvin Chow. He is the CEO of Dr. Wealth, helping us to give a snapshot of where things are going for Singapore stocks, which are going through some tough times right now, just a week away from knocking on the door of 4,000 points. Alvin, thanks for your time this morning.
Thank you for having me.
All right, catch up again soon. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.